Welcome to In-Depth for yet another look at what is making mining headlines in the Americas. Copper is expected to set new record highs later this year, but might be headed for a correction first, according to analysts at GFMS. Mining Weekly's Deputy Editor for North America, Lizzo, who is based in Toronto, Canada, joins me to discuss this issue. Welcome to the show, Lizzo. What exactly is GFMS predicting for copper this year?
Thanks, Martin. So GFMS, as you know, is a quite well-respected and closely followed metals consultancy. They put out these research reports on various commodities and looking at not only the data that they gather, but they're making predictions and forecasts as well. So they published a copper survey on April 6th that was launched at a pretty big copper conference that's held each year in Santiago de Chile. And what basically the sort of big headline item of the survey is that GFMS is expecting copper prices will set new highs over the course of 2011. They're saying, in fact, that the copper price will set new records towards $11,000 a ton. Now, in the near term, however, GFMS did say in their report that they saw a likelihood of a reasonably steep correction in the copper price. In fact, they said that they wouldn't be surprised to see prices go significantly below $9,000 a ton. Now, as you know, we've seen maybe the beginnings of that in the last couple of days. Copper prices have seen quite a steep pullback, but of course it hasn't only been limited to copper. There has been a broad sell-off in commodities in general. But copper, certainly, the price has fallen. And interestingly, one thing that GFMS said in their report at the time was that one of the reasons they saw the price as being vulnerable to a near-term correction is that a lot of positive sentiment and positive expectations about the way that industrial activity and the economic activity would develop had already been priced into the copper market, and so because of that, it left the price vulnerable to bad news that maybe was coming around the corner. So now what we're seeing at the moment is concerns about Chinese monetary policy are weighing not only on copper but on commodities in general. Worries about maybe the Japanese disasters having an effect on the global economic recovery, and another number of other factors coming into play. But coming back to the GFMS report, one thing that they also did point out was that if prices were to fall significantly, even prices may be nearing the $8,000 ton level. At those price levels, we would see a significant amount of bargain hunting and restocking coming back into the market. Not only investors but also consumers of the metal coming in and taking advantage of the lower prices. So we'll have to see how that develops. But that certainly would underpin and support prices if they were to fall to those levels.
And how are the supply-demand fundamentals expected to balance out?
Yeah, so the copper market ended 2010 in a deficit. That happened after strong demand in the second half of the year more than offset a small surplus in the first 6 months. GFMS is expecting another deficit this year in 2011, and then it's not part of the official copper survey report, but the analyst that I spoke to said he's expecting the deficit will likely again be repeated into 2012. We're seeing in the copper market a strong demand from developing economies like China, and then interestingly, the more mature consuming economies, the US, Western Europe, Japan, were strongly hit during the economic downturn. But over 2010, the recovery in consumption in those mature economies has, I think, it surprised a number of analysts in how quickly that recovery is developing. And I think, and that seems to have continued into 2011, and GFMS is expecting that will also continue to play a role in the market.
What about mine supply? Are companies responding to the higher prices?
Definitely. It does seem to be that copper producers, the copper industry in general, they are doing everything that they can to bring new production on stream. But that being said, and this is something that the GFMS analysts note, is that the industry has repeatedly failed to make good on its predictions of increasing production, bringing new projects online, and that is likely to continue to be the case. So there will be some new projects that are late, that maybe start up at a lower production level, some not at all or years delayed. And so that will have an effect on the copper production levels. And then secondly, coming back to the already producing assets, that we're expected to see ongoing disruptions at mines that are already in operation. So weather-related disruptions, as well as union labor disruptions, strikes, and so on. Obviously, at higher copper prices, the unions do have a much higher bargaining power when it comes to their talks with the companies. And there are a whole host of other potential disruptions that we've seen in the industry and are likely to continue. That all being said, the GFMS does expect that simply because of the price, that the increase in mine supply will probably quicken over the coming years.
Thank you, Lizo, for your time. That's the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquinho for Crema Media in Johannesburg.
Donate now and give 15 Rand a month. SMS JOIN to 41486.